Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the Hedgeless Horseman down below so you can follow along with Erik's work. Erik, always great having you on the show. And we actually were just at two conferences over the last week where we were in Fort Lauderdale, Florida for a couple of days, and then all flew to Atlanta, Georgia for another conference. Both of these put on by Top Shelf Partners. Both pretty good events, I would say. And at these events, it's always kind of a zoo of activity where you have different companies having special meetings. You had one-on-one meetings. You had a lot of investors you got to interact with, the conference organizers. There was little mixers in the evenings where you would get to spend even more time with the investors there. You get to rub elbows and bump shoulders with a lot of the key investors that are high net worth investors, very serious about the space. These were not retail punters for the most part. The people that attended these events were vetted, and they had to have a propensity for investing in mining stocks and bringing some serious money to the table. I think most people there were accredited investors. So your overall takeaway, Erik, as far as any of the presentations you saw from stage, any of the key takeaways you got just from being around basically a week of intense resource investing conversations?
Yeah, I would say that I prefer these types of conferences above like PDAC, for example, where there's no real, you can't really get into it with a lot of companies, except if you really, know the people and can book a one-on-one or have a dinner or something like that. So in this case, it's very intimate in a sense, and you see the companies more than once. So, if you have a meeting or watch a presentation and you think it's an interesting case, then there's plenty of opportunities where you can dig in deeper. And as always, typically you come up with more questions the more you get time to think about a case, and some questions or some answers to some questions open up a new question. So you can kind of do that follow-up thing. It's always good to see the face of someone you might have talked to or something, and you obviously get a sense of what they are in terms of what type of person they might be. Body language, tone of voice, how they respond to certain questions, etc. So it's much more comprehensive due diligence and a lot of stuff that's like really qualitative rather than quantitative. And I would say overall the very smart, investor base, I would say. It's like a lot of smart people, not necessarily that everyone is a 20-year mining veteran, but you could tell that like there's a lot of people with some, I would guess high IQ scores there, and they seem to be very bullish on the metals especially, and they seem to, like to get into the junior space. And I think this, again, is a good conference, or both were good conferences, because the average quality of the case that were there, I would say, is unusually high, let's say, because as you said, they were vetted, and I actually met some companies that I didn't really know that much about beforehand, and it's not often I am surprised in a positive way about a case that I didn't know about, because I'd like to think that I have some good idea of most of the, let's say, above average cases. And of course, there's a difference between a case that's, you can see the merit of investing, you see the risk reward, and there's always the problem is that I want the best of the best in terms of risk reward. And right now, everything is kind of cheap. So with that said, it's not that hard to find something that I think provides an attractive risk reward.
Well, to that point, when you're going to these conferences, it's a mix of existing portfolio positions and new positions. Let's maybe start off with positions that you already owned going into this event and you got to meet up with those companies. What kind of questions do you follow up on if you're fairly familiar with the story, but like you say, it's your chance to dig deeper?
I usually have a somewhat of a sense what's going on and what one could expect. But I do feel like, when you have conversation with anyone really, the highlights of a case that you get pitched in a meeting, for example, the half-life of that in terms of memory is relatively short. And that's one thing, I guess, with these, let's say, fast-paced one-on-one meetings. They're quite intensive. You have to soak, especially if it would be a new case, but like you get to soak in a lot of information and you kind of forget some stuff. There's like you were all up in arms about a case, and then it's like as time goes by and you haven't, I mean, you have a position, all that, but you haven't really refreshed yourself on the case, on the potential catalyst and expected catalyst, even if you kind of know them, but it's like they're not fresh in your mind. So it's just good sometimes to get a rehash of like, walk me through again. It's like, where are we? Is everything, coming along well, let's say, because there's plenty of cases where you were all excited, you bought in, and then you go into whatever, a correction like we've seen in some have barely started. And you kind of, you get colored by that. It's like, okay, the chart doesn't look that exciting. And then you don't feel the need to really maybe, refresh your memory on those cases because there's no obvious thing that makes you excited about it. And then you go to these conferences and like, oh, right. Now I remember why I was so excited and everything might be on track, but you, along with the market, have kind of gotten bored a bit with the story. And, the longer it takes from the last news release, for example, you have usually people sell a bit at least because they're looking for the next obvious catalyst in another play, for example. So it's just one of those things where it just reminds me how easy it is to be short-sighted in a sense. So yeah, that's basically it, I would say. I want to make sure that the case is intact and just get a rehash of the expected catalyst and why it's cheap, and then you kind of start to remember the case, why you got into it in the first place. And usually the conviction rises again until you start to forget the case and need another refresher.
Well, let's get into specific companies now. So, out of the companies in attendance at either Fort Lauderdale or in Atlanta, what companies did you already have portfolio positions in? Which ones were you excited about their upcoming catalysts?
That would be first Nordic is an obvious one. I have a very large position in that one, and they had news. I think it might have been during the conference or maybe slightly before actually, that the Pathfinder anomalies they found over at Storyuktan, they also found corresponding gold anomalies. And I saw some people or someone in the forum, for example, saying that, well, this is a nothing burger, but it's like when you think about it, it really isn't, because of Pathfinder anomalies. They're Pathfinders. They're suggesting that, hey, if they are Pathfinder for gold targets, I mean, there's no guarantee that it's just, not just arsenic, for example, or molybdenum or copper, but they actually found corresponding gold anomalies as well. So, I mean, all of that, just the pipeline just keeps getting de-risked, and it's been lengthening for quite some time. And I wouldn't doubt really that there's going to be even more targets once they've soil sample anymore. So it's just one of those stories where it's like the pipeline is getting better and better, fuller and fuller. But if somebody's a real catalyst hunter, I mean, there might be months until those ones are drilled. So it's like they're not exciting right now. They're very exciting from a HODL perspective in a sense, because I'm not paying for them. If they happen to come up with something good at any of those targets, that's, in my opinion, something I'm not paying for right now and therefore not really taking risk on. Another one would be Sonoro Gold, which, I mean, when I get excited about Sonoro Gold, I don't remember what the gold price was, but they were really low value company. I really like the management team, and they have had the Mexican curse, basically, that their next big catalyst is to get permits, because it's a very low capex project. It's not a tier 2 or tier 1 project. It's a small one with some room to grow, basically. And yes, again, get refreshing on the fact that, hey, this is a simple project. There are people on board which have built projects like this before, and now the gold price is at whatever it is, 3,200 or something. So again, they could be very close, or I think they're very advanced in the second Lassonde curve, in the sense that as soon as when they get permits, I think they could quickly get that 15, 16 million capex project into production. And all of a sudden, the current gold price would be highly relevant, and I would think they could both finance it and also have the skill set to put that kind of a open pit heap leachable project into production. So that is one also that's like I kind of got reminded why I liked it, and now gold happens to be even higher up, and obviously it's been some time since I got an update, let's say, so one would hope that we're at least getting closer to a potential permit. That's all it's like more time has passed, so if they're going to get one, we're at least closer, one would think. There's also Stillwater critical minerals, which I remember when I dug into that case. That was after a Beaver Creek, maybe 1-2 years ago, when I was talking to you and Michael. And it just struck me the more I thought about it. It's like, wow, this is pretty rare to have, a deposit like this in a country like the US, which has one nickel mine. And today, obviously, critical minerals, etc., is very much a hot topic, including copper, nickel, and I think they're up to like 7 or something that's on the critical mineral list for the US. So just the idea that a deposit and a system like that in the US next to a producing mine, with Glencore invested, with Ivanhoe's ex-head Geo down in the Bushwell complex. There's like the market cap has never really made sense, I think. But for, psychological reasons, one might better explain it as like, okay, high capex, nickel prices have sucked, sentiment for nickel juniors have sucked. And, there has not been that much drilling. They could probably have like 30 drill rigs on a system that size. But as a junior, you can't really. You want to limit dilution. So it's one of those self-fulfilling prophecies in a sense that, the less you do, the less exciting it does. And then the stock is not exciting. But I think that's just super cheap. Scottie Resources, got a chance to talk to Brad again. I still have a small position in Scottie Resources, but the sense I got was that, okay, they tabled a resource. It was not the world's largest resource, but still, it's like they didn't drill that many meters, and I think the underground grade is what, like 9 grams per ton maybe. It's like that doesn't fall out of the sky in a jurisdiction like that, so I can see how that's not quite cheap as well. And if they can get that many ounces from, like, I think they drill like 45,000 meters or something. That's not a lot of drilling actually to come up with that. So, if they just double the drilling, let's say they come up with, I don't know, 800,000 ounces more or something, then it's kind of really, really, really interesting. And also, there were other cases like West Red Lake gold mining. Talked to Gwen first time I met her actually in person. It feels like they have done all they can basically to prepare this for a smooth production, because everybody knows what happened to the predecessor Pure Gold Mining. So there's a bunch of nervous Nellies out there. For probably good reason, but at the same time they also seem to have a good handle on everything that kind of went wrong and how to not, let's say, treat a Red Lake type load gold system like this. So it's like, yeah, there's no guarantees, but if this is going to work, it's probably going to work now, given how much money and time they spent into trying to figure everything out. So they very well know that they are kind of on probation, and they have to really show the market that this can actually be profitably mined. And if that happens, I think the current market cap will look cheap, and of course, huge amount of sunk cost. And also, yeah, Denarius metals, which is also kind of like Cerrado, I guess, both gold and polymetallic. And that's not something I think the market typically likes, because, a gold bug is probably going to pick a pure gold company, and a polymetallic bug is probably going to pick a polymetallic play. So you have that, I think, diversification discount in a sense. And I don't remember if their gold mine is in commercial production down in Colombia, but that's one I think, based on the sum of its parts, looks very interesting. Obviously, there's some top-notch people in that story, and I would think that that's a lot of the case is simply that you're kind of betting on the team in place there, that hey, you don't need to be an expert on either really the gold deposit or the polymetallic deposit, but I think there's a pretty okay chance that from this market cap. Give it a few years, and they'll probably have unlocked and created value.
Yeah, good list of companies there, Eric, from some of the earlier stage companies that are doing exploration work all the way up through development and production stories. A couple companies there are getting very close to going in production. Just for people listening in, I'll throw out the stock symbols for those companies. First, Nordic is traded on the TSXV under the ticker FNM. Sonoro Gold is traded on the TSXV under the ticker SGO. We talked about Stillwater Critical Minerals traded on the TSXV under the ticker PGE. Scottie Resources traded on the TSXV under the ticker SCOT. West Red Lake Gold traded on the TSXV under the ticker WRLG. And then you just mentioned Denarius traded on the CSE under the ticker DMET. So a lot of good companies there to dig your teeth into. I also met with all of those companies, and they all have interesting catalyst and value drivers. Now, each day we had probably about a dozen meetings, and so there was a lot of critical minerals companies there. There was companies doing tungsten, antimony. There were some doing base metals and polymetallic. There were a lot of gold companies there. There were even oil companies there. Anything else catch your eye as far as new companies that you'd never sat down with before?
Absolutely. I mean, one that I had been looking into somewhat already, didn't have a position, Power Metallic Mines. That's the one where I'm pretty sure Friedland and some other billionaires are invested. I remember it was, I think I maybe saw them. I don't think I met with them, but I saw them at last Fort Lauderdale conference in October, and stock was kind of on fire. And I felt like, okay, I'm a bit late to the party. It's going to take a while to do some due diligence, etc. Now the stock has kind of retraced a bit. So it's like the pitch the CEO Terry Lynch gave me, I thought it was very interesting, especially from a portfolio perspective, where you have some kind of bird in the hand and it appears to be a lot of exploration potential, and then, a huge skin in the game, super well backed. I mean, I don't know how many billionaires is actually in that deal, and the elephant hunter himself, Robert Friedland. At face value, is it the cheapest stock out there? That I have a hard time to see. But if you adjust for, let's say, the quality, the backing, skin in the game, and all that, I would think that has some interesting risk reward. I have to dig a bit deeper before I actually if I would like to make a large position. But I started buying some actually for the portfolios. Then there was also US Gold, which I remember I owned maybe 2016, 17 or something, because it rang a bell when they said they had a peripheral project, which was called, I think it's the Keystone Project. Mostly an exploration story back then. So that's one I haven't looked into for several years. And then it's like, okay, you sit down, US Gold. US is obviously hot right now. Gold is obviously hot right now. And I find that they have a very advanced gold project, gold copper project, actually. And I mean, it's not the world's best project, but it's like it has a lot of things going for it. So it's basically also, I would say, pretty advanced in the second Lassonde curve. And if the economic study they have proves to be somewhat accurate, I mean, that could really churn out some money, and they appear to have very good people involved as well. So I would think that they have the skill set to actually put that into production, and I don't think it's the most complicated project in the world. Super tight share structure, and there's some other stuff that there's some twist to the story that I think look quite attractive. So that's one where, again, as we talked about quite a bit last few weeks or months, actually, it's like I'm very interested in the companies that are in the second part of the Lassonde curve, especially if they're gold projects, because obviously it's gold that's at record highs. And then were there any others? I mean, Zeus North American Mining, they're in Idaho, kind of compelling high risk, high reward story, a bit of a lottery ticket. And I like the fact that management was very upfront. It's like, we have a obvious target here, but I mean, if we drill that and that misses, I mean, that kind of changes the case for that project quite a bit. So it's not like I felt that, oh, don't worry, because we're gonna try to explore for 5 years more if we miss, and try to come up with anything just to keep the story alive. And then there might have also been stuff like, I mean, Fairchild Gold, kind of interesting. very early stage. That's one I'm going to look into more. Cerrado Gold, which you have, I think, mentioned to me before. And I remember I looked into it very quickly some months ago, or maybe even a year ago. So the story has changed a bit from then, but it's like also one which looks super cheap. They've gone from a pure gold company, I guess, to a gold and polymetallic company. So it makes the story a bit more complex, I guess. And yeah, I mean, I would say those were some at least of the ones I didn't really have a good grasp of, but I could, very much see a case for any one of them. It's just the, differences in terms of risk, I was gonna say, and in some cases, what commodities they're in.
All right, and just to throw out some tickers for people listening into those, Power Metallic Mines traded on the TSXV under the ticker PNPN. You got US Gold traded on the Nasdaq under the ticker USAU. Nice to see that big board listing. Zeus Mining is traded on the CSE under the ticker ZEUS, so just like the name. I don't have Fairchilds in front of me, but Cerrado Gold is traded on the TSXV under the ticker CERT. So yeah, a lot of interesting companies and a chance to dig a deeper well with companies that maybe have seen in the past or heard about, but you get to sit down and really dig into where they're at in the story. Now, there was also a number of presentations. So really the format was a mixing event and large dinner where you got a chance to network the first night of each conference, then a lot of one-on-ones like we just talked about. But then the third day of each conference in both Fort Lauderdale and Atlanta was presentations from the stage. And we saw everything from critical minerals panels, people from Bloomberg Commodities were there. You had different fund managers, you had a silver panel, a gold panel, and then you spoke each day in the Young Guns section. And we actually did a section together, you and I, John Finnick, and Paul Harris from Kitco, where we just talked about how we allocate to our portfolios. Do you want to share any of the takeaways you gave from your presentation as far as from the stage, or any other presentations that you saw from the audience that you thought gave you some good insights?
Well, in terms of the investment panel, the one we were actually co-hosted, and the one in Fort Lauderdale, I would say it just kind of makes it obvious there's like there's many ways to skin a cat. I mean, basically you, me, and John have, slightly different investing strategies, and some use technical analysis, some use, let's say, share structure, or, ranks basically different priorities when it comes to those things. And it's fun. It's like, I would say all are very good investors. So it just shows that, in my opinion, that the hard part is not really, well, there's no one way to make money, but the important thing is to at least find a strategy and try to stick with it, assuming it actually makes sense. And then, of course, your track record will tell you something about that. And I just, again, things goes to show us like you got to find something that works for you personally. It's like it has to cater to your basically mindset of sorts. Since I'm a very bad trader, for example, I simply don't really like to trade. I want to feel like I'm actually buying something, not just a piece of paper that is going to trade at a higher price. I like the idea of being an owner, even though, yes, of course, I will have to sell one day as well because there's something else that might be even cheaper and like even more excited to, quote, own. And then in terms of other panels, I mean, there was, I think he was from Bloomberg, which was very interesting, where he talked about the situation for gold, etc., and the situation for the US. So I would say, and that together with the silver panel, for example, you could certainly see that there's some tailwinds for both gold and silver, which looks, or which sounds quite believable. And of course, that's, a good and a bad thing in the sense that I don't try to let that affect me too much. But hey, I'm also looking for confirmation bias. I mean, if I find something that's very cheap, that I think is very cheap in, let's say, the gold or silver space, of course, I want to make sure that I stick it out and actually don't sell low, for example. So when everybody's maybe bearish and the chart might be bearish, for example, I'm looking for kind of any excuse to keep me long because I know how easy it is to just join the herd and sell out when everybody feels like selling.
Well, I know that both of us are more focused on precious metals as far as the weightings in our portfolio. So a lot of gold and silver. Now, you did mention a couple companies that had, like the Zeus or the Power Metallic, that had copper and nickel and PGMs and other things. There were a lot of focus at this conference, more so than others, on critical minerals. So not just the copper and the nickel, but also things like tungsten, antimony. There was discussions about even rare earth elements in some deposits. Do you have any interest, especially after coming back from a conference like this, in branching out at least some of your portfolio into some of those other areas, or do you think this is the time just to be more focused on precious metals? How are you looking at critical minerals as far as a resource investor?
Now, that's a very good question. I would say it's like my strength, I would say, is to keep to my core competency. I mean, it took long enough, took several years to get a grip on what made a good gold project, or what 1 gram per ton means in one setting and what it means in another setting and all that, and metallurgy, yada yada. It's like the critical minerals, especially, let's say, rare earths, and maybe the more special minerals such as like tungsten and stuff. I mean, I have a hard time, like if I see a resource, let's say, I have a very hard time figuring out if that is good or bad. That is a big problem in that sense, that it will be very hard for me to know exactly what I'm on, or being close to having an accurate estimation of what something is worth. But at the same time, as both John, who is also invested in, for example, tungsten companies, and tungsten has been doing very well, so it's like that's a strong narrative. And the same goes, I guess, for some other specialty metals like antimony, for example. So I mean, one way I look at it is like, okay, maybe I'm missing this in my toolbox, let's say, that I'm not flexible enough when it comes to jumping on a narrative that's very hot. And I mean, we both saw the lithium rally some years back, and that was absolutely incredible. And I didn't know much about lithium, so I didn't participate in it. So I mean, is that a good or a bad thing? I mean, I don't know. I mean, it depends, right? I mean, if you have some good timing and you're not getting in late when it's super hot, yada yada, then that might be a good idea. But at the same time, it's like, is it worth it? Is it worth it to branch out and get into something and more play the narrative in light of what I would hope to be a very low market cap, let's say, for a company that's active or is about to get active in that space? That's a much trickier question. Again, it's like, in my opinion, the most important thing is to start to limit the amount of mistakes you do. Whereas, like always, we're very greedy. We tend to, especially, I mean, the ones with usually the worst track record, they're the ones chasing the highest possible return. So usually they should be very high and in short order. So it's easier to also jump on board on those kind of narrative driven investment themes, let's say. And I simply think that I don't know if I would be the fish or the shark in that scenario. And if I don't know what the good early stage project in some special metal looks like, then I don't know really what I want to see. I don't know when it's time to get off. I don't know how long maybe one would expect a cycle to start to turn down, because I don't know how the supply picture looks. I don't know if there's dormant big deposits that contain some of these specialty metals somewhere. That's like everybody else but me knows that, well, at some price that's going to be brought onto the market, and it's a small market in that metal, and that's just going to crash the price if that supply comes on. So I see a lot of ways for me to maybe make mistakes. Whereas like in the gold and silver, maybe I have an easier time to appreciating what value is, and if it can sustain, if it's has long-term value. And in the case of especially gold, I mean, you're not too afraid of missing something in the macro picture. There's no gold mine that's going to come online and all of a sudden swamp the price.
Yeah, I think it's a good point. These specialty metals are more opaque, and to your point, it's hard to know how long these cycles are going to last, because a lot of these niche metals tend to be parabolic in nature over a couple of years. They go up big, they maybe go up for a couple of years, but then eventually supply comes online. But just some of the companies there in attendance mentioned, for example, Aftermath Silver thinks they can supply most of the manganese to the world with just their one deposit. Guardian Metals and American Tungsten think they can supply most of the U.S. tungsten demands just with their own deposit. So if that's true, if one company can supply a whole country or a whole global marketplace, these are very small markets, but it's just interesting. Mandalay Resources merging with Alkane to form a larger gold company, but still producing a lot of the world's antimony. So it's just, they're interesting markets. I just thought I'd follow up with you on it. But just wrapping up the conferences, you're about to go to another conference in Mallorca. These are more niche conferences, good locations. You have nice hotels, good meals, all those kind of things factored in. So compared to the larger conferences like the PDACs, when you get out of these, you've had these quality conversations. And like you say, maybe you've bumped into a person not just once, but maybe two or three or four times and continued to follow up and ask questions. When you fly back home, if you're like me, your head is swimming with ideas. Is there anything else you're going to do now to prioritize? Are you looking at possibly doing any portfolio shuffling based on attending these events, or just any other key takeaways as you encapsulate all the ideas you just heard over the last week? What kind of action steps are you going to have when you get back home now?
Yeah, I mean, I would probably, like I do most of the time, or actually sometimes I forget, one has to be able to kind of screen and screen quickly. I mean, if you can do it quicker after you've actually had the meetings, etc., it will still be somewhat fresh in your mind. So then I like to, let's say, put down some notes, like what was it that stood out in that meeting that I'm going to forget about in a week from now or something like that. So I put that down. It's like what was actually interesting. And then, of course, I have to kind of compare them to not only each other, but every other holding I already have. And the more I dig, I mean, conviction for me comes when I, feel I kind of know a story much better than the market, or at least can figure out what the market is getting wrong. I mean, is it a timing mistake that some catalyst is, 3+ months out and the market simply doesn't care about it? Is it because of this or that? So the first steps tend to be like, okay, screen down the ones that are the most interesting, then go in and look the presentations, and if you kind of confirm your own bullishness or interest, let's say, from your interview one-on-one meeting, then you go, and I tend to look at every single video presentation I can find. And then if I'm thinking that, okay, this might actually be good enough to have a core position in, let's say, then I usually, email the company and set up another meeting, a Zoom meeting, where you can, get an hour, let's say, and really dig into some aspects. Because I gotta tell you, it's like, even if I take notes during a meeting, I mean, most of the time it's like just a few words on every point, let's say, and then I forget, like, okay, I wrote this down, and then I even forget why that was important, because I mean, when they go through a point, maybe they'll cover like 5 different aspects on that point, and you just wrote down the point, for example. So usually it's something like that, and again, that opens up for more questions. So it's like, okay, now I'm remembering some points, and then you have time, if you're in a Zoom meeting, for example, to follow up on each point. And it's like, what's the impact here? Why is that important? Because I mean, during those one-on-one meetings, you have 30 minutes, and I'm not against that at all, because that also forces them to kind of pitch the highlights, let's say. And one would think that they would be good at kind of discerning what are the important aspects from an investor standpoint. I should be able to get that in a 25-30 minute meeting. But then again, if one is considering all the risk reward, etc., and it's like, okay, I'm going to map this as a potential hodl case, for example, then I want much better detail, typically what the risks are, what the, let's say, terminal value is. The terminal risk is like, okay, if I buy this today and forget about it, what are the odds that I'm actually not going to be down 100%? And what are the upside scenarios? What could happen down the line, for example? But then you need, a much more thinking, much more consideration, and usually you have to follow up with a lot more questions that you then have to think about than you could squeeze into one of those one-on-one meetings.
All right. Well, I think we'll wrap it up there for today, but just hope that helps people listening get a flavor for these events, how to get the most out of the events. When you're hit with a barrage of information, how do you filter through it? I appreciate, Erik, you sharing your process and what you'll be doing as far as a follow-up. I think it also highlights how much work it is to just do due diligence on these companies because it's a series of exposures. Very rarely, I think, do either of us just buy on a hot tip. It's more of digging in, getting question answered, maybe getting some highlights, and then going back if you're really serious and digging in even deeper before pulling the trigger on it. So, a lot of good ideas out of Fort Lauderdale and Atlanta from the Top Shelf event. It was great seeing you in person, as always. And for those that want to get more information and follow along with Erik's work, well, he'll be unpacking some of his thoughts from this conference and all the conferences he's attending and all of his investment cases. Definitely check out the link to thehedgelesshorseman.com below in the show notes. That way you can follow along with what Erik writes and the videos he produces. Erik, as always, looking forward to our next conversation.
Thanks, and the same, Chad. Also, as always, consider me biased. I own shares of some of these companies, and some might be banner sponsors as well.